Hey guys, Tiff the GammaEdge here coming at you with a post-market recap for October 10th, 2025. If you'd be looking at Twitter, you'd think that yesterday was a Black Friday, right? Recording this on Saturday, actually. But look, good opportunity to take a deep breath. Say if you spent all night in this morning, like trying to figure out why the market crashed, see if you missed something, like could be as simple as there was just a tweet and the market sold off, right? There's also an alternative universe where the White House didn't say anything, and we woke up today and yesterday was, a flat to up day. Sorry, but what is important is to, look back on your process, understand what happened, how you then executed, and see if there are adjustments that need to be made. Like, yes, I took losses yesterday, but I also did not lose a single second of sleep because I know that sell-offs yesterday suck, but they happen. But there's also risk management in place. As an example, market trend model had been continuing to weaken. We said since what is this, Tuesday or Monday, that the bullish momentum signal was turned off and our P2P and our wheel mechanical strategies were not entering new long positions. So we knew that conditions under the hood were not great. So I therefore only had a couple positions on. Yes, all those positions took losses yesterday because of the price action, but whatever, like wasn't full port long either. And just stepping back from like a swing trading time frame, right? There's a difference in swing trading, there's a difference in intraday trading. Intraday trading, we completely understood once the sell-off happened that there is continued downside pressure and you could take advantage of that. But from a swing trading time frame, like by definition, you're going to take a drawdown once all-time highs stop happening. But once that does, that's where you have stop losses. That's where you start to raise cash and you wait for the next opportunity. But the drawdown you take should not be anywhere close to the amount of gains you made during the run up. So the TLDR of that rant is yesterday sucked, but you need to understand what your risk management process was. If you had one and you stuck to it, or you didn't have one, then you need to figure out how to get one. And so with that, again, quickly, I already hit on it a little bit, but just, focusing on the swing trading stuff, our bullish momentum signal via the market trend model was not turned on yesterday. It turned off on the 7th, actually, which was on Tuesday. So we were not entering any new longs via our mechanical strategies. So that was kind of point number one, that the market was, weakening a little bit. Could you have predicted this large sell-off? No, you could not, but we knew that, under the hood, things were not as good. Then right after that, Thursday sustained selling throughout the session, Friday sustained selling throughout the session. So coming into next week from a swing trading point of view, not interested at all in getting new positions. We need to see a material improvement in the market trend model before we even consider that. So now from here, yes, if you want to short, that's fine. But again, elevator down, stair steps up. So you need to be butt in the seat because these are very short-term. Swing trading to the downside is tough, right? Because you can get your face ripped off very easily. So these are going to be very tactical trades, or you can sit in cash, rebuild, save that emotional capital, be ready for when the next upcycle happens. Now going to a intraday point of view, right? Obviously doing our transition zones, understanding where those key levels of reference on the SPX are. Obviously we had the huge sell-off lower. So again, just sticking with the market trend model on an intraday time frame, right? Those specific tools we use, first off, the filter tick, linear down day, cumulative tick, linear down day, which that means there's sustained selling throughout the session. So yes, you may have missed this large initial move lower. Let's pull the chart. You may have missed all this action, but from what time is that? But from right 11:30 to the market close, like this is controlled selling to the downside, and we knew that there was large selling under the hood. So from there, at least not trying to be stubborn and try to get long intraday was stupid because none of the tools were telling you to do that, right? Like they're all saying sustain move lower. So shorting pops, or, shorting some way or just stepping aside and, understanding today's super volatile day, don't want to participate, which that's completely reasonable as well. And then also, right, that's where our intraday market analysis or not intraday market analysis, intraday volume analysis of SPX 0DT options pays dividends as well, right? Because again, we have the calls green, puts red, looking at the centroids, which is every 5 minutes. We are aggregating the volume, finding the middle point of that distribution, which is called the centroid. We're plotting that. So from the open at any point in time, we can understand what the behavior of speculation is. And we can clearly see yesterday, call speculation was definitively lower all session long. Put speculation, flat to lower as well. So, very crystal clear again that market was not moving higher, right? Calls were not coming in higher, no sustained move higher at all. just beating lower all session. So coupling that with the market trend model, again, very obvious on an intraday time frame that we were moving lower. So, I mean, yeah, that's really just wanted to come on here and say that today. Big takeaway, don't torch the data in hindsight, thinking that you missed something, right? It could simply have just been news came out, the market just aggressively sold off on an intraday basis. And then from there, right, you either had a risk management in place or you did not. And then from there, right, hopefully, going through the tools, the market trend model, especially from a swing trading time frame, is helpful in, understanding is a market weak or strong, right? And it's very possible that the market could have continued to go higher, and the market trend model would remain weak, but eventually, right, like both can't continue to happen. If the market trend model continues to weaken, then eventually the market is going to go lower, right? It's just, do you have the discipline of not getting FOMO and thinking the market is going to continue higher forever when we know that things are getting worse under the hood? Or you have the discipline of understanding, hey, this is not going to continue forever. And then on an intraday time frame, right? It's again, having the discipline, right, and understanding. You may have had one thesis coming into the day, but market action changes. The tools are telling us things are changing. So do you either keep fighting that or do you accept it? So right, just ending it. Losses are never fun, part of the game, but it's also a really good opportunity to reflect, enhance your systems, and show up Monday ready to go. So with that, you guys have a great rest of your weekend. Any comments, questions, all that good stuff, put them in the comments. Come on in the Discord. We've been chatting about it all morning. So happy to continue to do so. So appreciate the time and talk to y'all later.